Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bearish black crow yesterday, and a significant one as well, as it was a follow-on to last Friday's combined bearish opening black Maribozo and bearish engulfing pattern that was just. But perhaps more importantly, it was a second consecutive close back below the combination of the upper tine, currently at 113.98, and within the broken January to May 2021 bearish Andrews pitchfork, as well as the declining medium moving average, currently 114.03. This is very significant, as these two, though breached and broken, have again successfully kept a lid on the market and pressured it lower since, well, back from last year. Additionally, the market also closed below the following significant levels. The short-medium moving average, currently at 113.24. The lower trend line of the November 2021 to January 2022 ascending triangle, currently 113.17. The neckline, currently 113.10 of the April to May 2020 reverse head and shoulders pattern. And finally breaching, though not closing below, the interesting 61.8% Fibonacci line of the March 2020 to January 2021 move at 112.89. All the action since the start of the year continues to be reminiscent of a potential pattern build-up, such as a diamond pattern or something similar. Unfortunately, it's still not that clear, but it will become so, and soon. So far today, a reversion back up through the neckline, lower trend line of the ascending triangle, and the short-medium moving average. The market has seeming aspirations to become a bullish double, or perhaps a bullish engulfing pattern right now. However, prices have not yet approached the overhead combined upper tine and medium moving average as yet. Cable, aka sterling against the US dollar. A bearish black crow yesterday, and possibly a day two in a 2-day separating lines pattern, though it is a stretch given last Friday's indecisive spinning top. However, the key event was how the market was capped once again by the upper tine, currently 135.64, of the October 2021 to January 2022 bearish Andrews pitchfork. This was the 4th day in a row on a closing basis that this upper tine has capped the market. Meanwhile, below, we also have support on a closing basis from the combination of the 2019 high at 135.16, the flatlining medium moving average, currently 135.03, and the September 2020 lows at 134.83. Now, whilst it may look as if the upper tine of this bearish Andrews pitchfork is seemingly dictating the play in this market, even though it is of a fairly young construction, I would however point out that the market is actually getting squished in between the upper tine and the previously mentioned supports below. Now, this situation cannot continue much longer, maybe by the end of the week, or at the latest early next week. Meanwhile, I have droned on interminably about the longer term whole of 2021 double top pattern, Adam and Eve type. The original targets were initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. Well, target X2, the initial target has already been reached late last year. Target X3, the secondary target, is still there. As you can imagine, this target is just so much harder to reach. So far today, a lower open, but a pullback up, though not really challenging the upper tine as yet, and looking a lot like a bullish double right now. Euro sterling. A third bearish black crow yesterday, but in reality it was an indecisive spinning top, just a bit lower. I suspect the indecision was brought on by the proximity, nearby and below, of the congestion between 83.60 down to 83.36, plus the broken, but potentially still potent, lower falling wedge trend line, currently at 83.33, of the old August to December 2021 falling wedge pattern. I further suspect that this congestion may well hold up prices for a while at least. Overhead and some distance away, we have the declining short-medium moving average, currently 84.14, and the medium moving average, currently 84.43. So far today, a test back up, once again, but not a very enthusiastic one at this time. US dollar against the Indian rupee. A fifth bullish white soldier yesterday, though it not only looked a bit like a possible hangman, but it was also a follow-on to last Friday's indecisive spinning top. Interestingly, the market did punch up through and close over both the October 2021 high at 75.67 and the April 2021 high at 75.56. It was just a little bit surprising that the market seemed to run out of steam on the upside soon after. You see, I really don't have much resistance overhead until about the 75.96 area. This actually also ties in to some degree to looking at the 2022 action as possibly a bullish halfway hesitation. Now, if that turns out to be true, then we have a potential target X in the 75.90 area. Watch this space. So far today, a really interesting day already. A higher open and a slightly higher high before a big drop back down, breaking below the 75.56 and 75.53 levels and down to just below the August 2020 high at 75.31. In the process, we are now making today a possible daily key reversal. Now, if we close tonight below 75.30 or above 75.68, then we'll be on. Right now, we are close to a daily key reversal down. US dollar against the Brazilian real. A really interesting, immediate countering bearish engulfing pattern yesterday, coming after the last 2 days of last week, gave overtly bullish patterns. The cap on the market was once again the lesser Fibonacci levels at 525.65 and 526.79, whilst the support was the lesser Fibonacci line at 520.27. So it seems this lesser Fibonacci congestion area is both holding up and capping the market. Overall, the market is still within the early January to date declining broadening wedge pattern, currently between 529.08 and below the bottom of the chart to a certain degree, 493.89. This wedge pattern, as detailed in its name, has been dictating a move lower since about mid-January. US dollar against the Mexican peso. Second bearish black crow yesterday, though I could see if you called it a first, as the previous session was a long-legged indecisive spinning top. The move lower was unsurprisingly halted just ahead of the lower time, currently at 20.3585 of the new but perhaps influential September 2021 to January 2022 bullish shift pitchfork, plus the nearby slowly rising long-moving average currently at 20.3278. Meanwhile, overhead, we still have the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.6062, plus the short, medium, and medium moving averages, currently 20.6435 and 20.6585 respectively. Interestingly, yesterday's action was well within Friday's action, despite the large candle pattern. Now, so far today, another attempt lower, testing cautiously the lower time. Thank you for listening. This week, this short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.